Hi everyone, public stock market update part 1. I'm going to break this down into two parts because I'm making it even longer, even more value filled for you all. So what is the first thing you are seeing? This is stock prices to forward earnings, in other words, to their projected profitability. Why is that important? Well, because it is how many dollars you're paying. In the case of Microsoft, $31 for every expected future dollar in profits. Red means expensive, green means a little bit cheaper. Of course, what it shows you is that valuation and price to prospective earnings is not the only way in which you should measure whether a stock is likely to rise. However, it does tell you that telecoms, and we're going to come to this in a second, interestingly, are relatively undervalued on that measure. So is energy, so are banks, and we'll come back to healthcare. It is as well. So I might keep half an eye on all of these during the course of the year just to see, as a tiebreaker, if I had two stocks and one was in telecoms, the other one was, I don't know, industrials or real estate, I might say, well, I'll give the tiebreak to telecoms given the undervaluation. But I just wanted to show you the state of valuation. Another new thing we're doing this week, just give you just where the market is overall. This is going to be difficult to see perhaps on some of the screens, but I will dip into some of these charts as we progress from the likes, of course, of all the way of Apple, NASDAQ, Standard & Poor's, Amazon, Alphabet, Meta, Nvidia. I will go into deeper dives on all of these. Overall, positive week. Overall, things a bit overvalued, as we know from the previous chart, and a bit overbought, but let's look in more depth. And remember, I'm not just going to look at the charts in any and all of this. I do go through 10,000 equities. I look at valuation, revenue growth, dividend growth as part of my Great Investments program when picking stocks for my pension, and look at cash return on capital invested, invented by Deutsche Bank, used by Goldman Sachs Wealth Management, because that was a critical factor on why you get exceptional returns. And I need all of these to be green. Momentum, Citigroup's done research, Man Group has done research, or AHL rather, the hedge fund, on why that's important. Sortino, Alpha, also, all of these would need to be green. Okay, just a reminder, how has the past week gone? Well, obviously Tesla took a bit of a whack, so did Intel. Come to some of those later. Some of these might be mentioned only in the private channel for my clients, but energy had a good week, and we saw already it was somewhat undervalued. Telecom services, Verizon, for instance, which I own, had a good week. Netflix we'll come to in a second as well, and Disney. Oracle right up there, and the banks, which we know are undervalued, had another good week. But don't read too much into one week's momentum, of course, just because even then it aligns with value. We want to look at all of the other factors. We need to tick more boxes than that. Otherwise, it would be speculation. Speculation is not what we're interested in. Exchange traded funds, this is just 1 month performance. As promised on my YouTube channel, I will do other videos on exchange traded funds and look at some of these. If you've got ideas you want, just put it into the comments. Don't forget to like and follow for more, but put it into comments or email me. Have a look at alpeshpatel.com/links if there's things you'd like me to cover. Markets here today, the Nasdaq's already up over 4%. The UK markets are already down 2.3%. So there's already a 6.5% gap open between, well, UK people, if you're with, I don't know, St James's Place, God forbid, or, those kind of UK tracking funds, then you're already in negative. Your pension's already decreased this year and you barely exited January. Whereas, of course, the Americans and those Brits who are in their pensions looking at that, well, you're already up 4%, even if you're just tracking the Nasdaq. If you're tracking the S&P, you're up 2.5%. Okay, so again, let's look a little bit deeper. As I said, where is the money being made? Now, looking at the sectors, what's driving all of this? We tend to look top down. What is driving all of this? Well, communications, and I mentioned Verizon, for instance, a moment ago. And of course, as you already know, technology is driving all of this. What isn't driving all of this? Well, it's certainly not, as we've seen, real estate or consumer discretionary as things stand. Again, don't read too much into all of this. This is just 1 month. But it's sometimes useful to know, well, wait a minute, what's driving where the money is being made? Put another way, what's driving it so far? Mainly the momentum Stocks are driving a lot of this as well. What isn't doing it? What's at the bottom of that part? And sorry, I know the colours are similar. Well, some of the small caps, I'm afraid, it's not where the money is. Actually, we thought maybe there'll be a rotation out of the large cap, big companies into smaller caps. It's time to move. Not yet. Again, I don't want to read too much into any of this at the moment. It's only a month's worth of data, but it's just to give you a backward-looking explanation of, well, where's the money come from at the moment, what's been driving it more broadly. Of course, over the past year, the NASDAQ is up 47%. So if you're one of my Great Investments Program people from a year ago, you should be doing rather well 12 months in. Standard & Poor's up 21%. I mean, I'd take 47% on my pension anytime. To be honest, I'd be happy with 21% in a year with my pension, even though I aim for a lot higher because the NASDAQ tends to deliver more. I'd still be happy with 21% growth in my pension in a year. Okay, and of course the UK markets were just anemic. You were getting bugger all over that period. Just out of interest, the top 10 S&P 500 stocks over the past month, these were the returns. Nothing, I mean, I'm going to come to Netflix, nothing else I want to necessarily, and Nvidia I'll come to in a minute. I can't go through them all. This is not a buy list by any means. There's a lot of momentum there. There's a lot of companies which are overbought I wouldn't necessarily touch. And of course, the worst performers in Tesla, you'll know I got out of it in October. I've been telling you, and I've had a few people email me saying, I wish I listened to you. I might get T-shirts with that printed on it. I wish I listened to you. So Tesla's now down 27%. Okay, the others I've got nothing to say. I certainly don't look for recovery plays or turnaround situations, so there's nothing to add. I just want to show Western Digital because it was up here. This is not a buy. I just thought I'd pick one which had shot up. And the problem with Western Digital is for years it's just going sideways. You know, I remember Western Digital from back in the day when I used to get their hard drives. And look at this, it's still at 2018 levels. It's almost like a FTSE 100 company, just goes nowhere. And you think, at last we've got some momentum. Now, this is a classic example of where if we got in there, or if one were to get in there, and I wouldn't have got in there anyway, and didn't, when the MACD was oversold and just starting to rise, that blue dotted line just starting to rise, then of course you'd be sitting on a healthy gain. Getting in now with a company which has been going sideways for 5 years, okay, and which, when the MACD has previously been in this situation, actually hasn't necessarily had much further to go. Look at there, it just fell again. Makes it somewhat one where I'd say, and this is my rule to people, if in doubt, leave it out. Okay, so that's why I'm showing this, just to explain, or I'll give you a bit more thinking in this. And like I said, with this weekly stock market update, I've broken it into 2 parts so I can give you more information, more data. Let me know if you like that. If you just want it in 10 minutes, let me know that as well. We've got a lot more to go. FTSE 350, the 350 largest UK companies over the past month. These are those. Nothing I've particularly got to add into any of those. That's not a watch list. And equally, this isn't what caught my eye was Jupiter Fund Management. So much money leaving Jupiter and leaving Close Brothers as well. I don't know what watches Switzerland have done wrong. I certainly don't do turnarounds or bottom fishing, so I'm not interested in any of these in any event. The S&P 500, that's my bullish projection as it stands today. Okay, the MACD is midway between its highest buy point, and let me just draw that for you. Okay, it's there, it's neither overbought nor oversold, which isn't too bad, and there's still a bit more that could go. So I'm in a pretty good place with this. Now, in part 2, I will cover, well, the FTSE 100, not too happy, not really excited about that, but I'll cover the NASDAQ and individual stocks and a lot more in part 2 of this video. Okay, don't forget to like and follow for more. Apologies, I've broken it into 2 parts, or maybe I shouldn't apologize. It's just to give you more content, and there's a 10-minute limit on TikTok, for instance, even though this will also appear in YouTube. So this is the public weekly stock market update.